We're live. Okay. So I was going to ask you about this online feature, the feature that's in print that you're also in is coming out Monday online. And I just wanted to do a quick update because I'm going to do a video tomorrow, but I just wanted to get your thoughts on right now how you would characterize, the natural gas world in the US, around the globe, and in Europe. So we'll take it first. What's natural gas? What are the dynamics right now in the US?
Well, really, the dynamics in both the US and Europe is that storage is relatively full. And I think there's some optimism that there's adequate supply, particularly in Europe. But that remains to be seen, because just having inventories is good, but usually there's peak needs. And if you don't have this sources like Russia, we could have another spike. In fact, today, I've just looked it up, Dutch prices were up 8%. And they're still about approximately $30 an MCF. So they're still 5-6 times what they are in the US. But also for the US too, it's like, great, okay, storage is full, but so if we have a warm winter, we could go down some, but if it's super cold, that's not going to help.
Right.
I mean, it'll help some, but basically natural gas is a winter fuel. It's determined by the weather, and it's only the heating season doesn't start for a week. So nothing except for very unreliable intermediate term forecasts. We don't have any information about the winter yet, so it's highly uncertain, but it's come down, so there may be more upside than downside.
Right. I saw the futures were way higher further out though than
yeah. Well, there's normal there's a normal curve for natural gas, so with the futures will go higher during this winter.
Yeah. And what about natural gas, like in Europe specifically? What are your thoughts on? Okay, so they have their storage full, and they think they've got it, covered unless it gets really cold, and then that creates other issues. Any thoughts on that?
Well, I think that they're being a little bit optimistic, because just normally you have flows of gas and storage, not just storage. So, and since a lot of the gas isn't coming out of Russia, that seems like that could be a problem. Plus, they have unreliable power generation that shouldn't be used for capacity, only energy. So all the renewables have no capacity. So capacity is the ability to deliver on demand. And so if there's a sudden need for capacity, that seems like a fairly significant risk that you have a spike in natural gas prices.
Right. And then that's going to reveal the pain, because I was just at a lunch, and there was some people from Berlin, and they're with a think tank there, and they were talking about, and I told them about how George Yates, this entrepreneur that's starting to produce more in Spain, but they were kind of ready to get going in the UK in the Bolan Shale, and because the moratorium for large-scale hydraulic fracking and drilling had been lifted by the Truss government, but now with this new prime minister, that is highly likely to reverse, and so the industry is starting to try to educate people that what that means. I mean, there's also, and I'll get back to Germany, but there's also implications for investors, because if there's all these policy reversals, capital's not going to want to move there and be at risk if they think that there's going to be flip-flopping in policy. Who's going to make those long-term commitments to help the UK become more self-sufficient because they have plenty of natural gas resources, and they could turn this around. And so if it's a cold, terrible winter, they're going to have high prices, so they're going to potentially feel a lot of pain, and not be thinking long term.
I wouldn't be so certain that they don't ultimately start drilling again.
I mean, it's the answer, right?
And it's logical. And now the politicians realize they're going to lose their jobs too. So that focuses the mind. So drilling for natural gas is, and even in Europe, in continental Europe, they've acknowledged that it's a key transition fuel, which is a new development.
Right.
So I would be surprised if there wasn't some opening of drilling in the UK and even in continents.
Yeah.
Or at least openness to particularly bringing gas from the North Sea, like incremental drilling in the North Sea.
Right.
Because it's just logical and it is environmental.
Yeah.
And they need it now economically, and they're going to lose their jobs if they don't improve it.
Well, and I'm talking onshore, and there's still that hangover, from Putin's disinformation campaign, the concern about, seismicity and safety and all this stuff. But if anything, we've proved in the US for the last decade that, we know how to do this. The technology's there, and it's just sitting there on a platter ready for them to say yes. And so this new prime minister, who the whispers I hear is that he's going to reverse and put the moratorium back on. So that's what I'm hearing. So that's why I'm talking
about. It's not impossible, but it is illogical. So I wouldn't be too confident until it actually happens.
Yeah. Well, let's hope for the.
I mean, it's, in other words, it's just a fundamental rule. Like, if a rumor makes sense, then it's much more likely than a rumor where it would be bad policy.
Well, and then the other side of this is that Germany, from what I heard from the people I talked to today, they're about to spend $200 billion, euros, to cushion the blow to firms and consumers. And I mean, they're just printing money and gonna cause the taxpayer to pay for this ultimately anyway, instead of doing something long-term, again, producing indigenous resources that can help supplement whatever, LNG they might, be open to now. So it's really crazy, and it's sad because it just seems so obvious to start producing some of your resources. There's American technology and know-how, and there's capital sitting on the sidelines that wants to be deployed, so anyway, that's sort of what.
Well, I think that's whatever the short-term machinations are, ultimately they're going to want, in Europe, they're going to want to develop their natural gas resources.
Right.
And the only comment I would have about subsidizing is not just the budget impact, but of course you don't let the market operate, so you increase the demand for natural gas.
Exactly.
So one of the curves. So in the actual market, you could, like, the problem with natural gas is that, as you saw in Texas, it can actually go to nearly infinity.
Yeah.
There's nearly an infinite demand for power, because at the margin, at least, because certain or many applications absolutely require even life and death requirements for it. So it can go in most of the markets are deregulated, so it can go to infinity. So if you cap, when it goes to infinity, in theory, you would get some conservation, but if you subsidize that, then you don't get that half of the equation. So you could make it even more volatile in the long run. That's the biggest argument against it.
Right.
Market operate, not getting any conservation. And ironically, the conservation is what actually would reduce carbon consumption. So
Mhm.
they're then subsidizing, not that that's the highest priority right now, but
Right,
so
right.
that's not good long-term. What they should do is give income, based on income. It's not just subsidizing for everybody, but it's
Right,
hard to do, hard to implement that.
right. No, I know. It's a little bit of a twist in this terrible saga they have going on, and surely practical solutions will start, prevailing. And yeah, you're right. I mean, the market has to work, and the market is generally smart, and and sorts things out, right?
Right. So they're gonna make it worse, but they're gonna ultimately develop the natural gas resources they can. And it can just be importing it from overseas to
Mhm.
have to, that's expensive. But the change, regime change is gonna focus the mind. It's
Right,
already happened in Italy.
right.
It's likely to occur in the UK, although it's not clear that the Labour government has the answer either. But um, people just get angry when they can't pay their bills. They get mad and they vote people out. It's going to happen in the United States too
Right,
in a
right,
couple of weeks because people are angry because their budgets don't balance anymore.
right.
So the I wouldn't be too focused on the near term because it'll sort itself out.
Yeah,
Particularly, we'll see how the winter goes. I mean, if it's a warm winter, maybe everybody will calm down, but it's a cold winter. I would be surprised if we didn't have some spikes. We're at 108 up to at least 200. It's
mhm,
extremely volatile. That could only last a couple of days, but just like in Texas, if you got a freeze off and people need power, then the price of natural gas is going to go to nearly, could go to any price almost.
yeah. Well, and it's psychologically destabilizing when you have those kind of spikes, both for people, because they're going, "Oh my God, I'm not gonna be able to pay my mortgage, my food, anything," when they see it, because the news, blasts it around. And then business is the same thing. I mean, there were bankruptcies here, as a
Right.
result of the fallout.
One thing they should do, which I'm sure they're contemplating, but if they have it in markets where it's deregulated power market, they should convert the non-gas generators to be cost of service.
Yeah,
So in other words, they don't, because they're just getting a windfall. Now coal prices are rising too, but from whatever their normal return would be, based on market coal prices, they shouldn't get the difference between market coal prices and natural gas. And
mhm,
the nuclear generators, same thing. So that they're just getting, to the extent there's they're deregulated, which certain markets are, they're just getting a windfall and it doesn't do anybody any good.
right,
Like,
right,
if you're producing natural gas and oil, then you get more cash flow, you can drill for more wells. But if you're just running a nuclear power plant, it's not like you're going to go build a new nuclear power plant because you're making a lot of money for 3 months.
right,
That
right.
it's not really like it's more, it sounds like a windfall profits tax, but it's more just converting them back to the old model of being regulated, where you got a regulated return on the generation and then the ratepayers got whatever the fuel cost was plus the capital charge.
Right.
They
Yeah, the
shouldn't do
only
that, as in that wouldn't affect supply because the coal generators are baseload, they're gonna just operate no matter what.
yeah. Yeah, it's just, again, it's market distorting, politician pleasing, short term, all that.
Look, I mean, I understand why their subsidies make sense because people can't pay their bills.
Well, yeah, in Germany, absolutely. I mean, it's critical, and it's crisis. They're having to respond because of, the Russia-Ukraine situation. I mean, this was a black swan. Well, I mean, actually, Putin's been showing you what he was going to do for a while, but you know what I mean. Generally, it's caught everyone off guard to some extent, and the fallout from it, and the way it's changing, the energy outlook, is pretty dramatic. Because in this lunch today, it was about blockchain and cryptocurrencies, and at the end, all anybody wanted to talk about was Russia, Ukraine, and energy on the continent. And
Oh, that's funny.
yeah. So um So it looks like oil prices are going up a little bit, to reflect reality. And then it also looks like there's this, whispering of, maybe things are not as bad, maybe we're not going to have a recession per se. Just, I know the headlines change every day, but
I think most people think we're gonna have a mild recession. That's what we're forecasting.
yeah,
You can't have rates. We're not gonna have a recession like we did in 07, 08, where we had 4.5 million homes because we have shortage of homes, but there's not gonna be as many homes built. There's gonna be less employment. Employment will rise slightly, and that should produce unemployment will rise slightly. That should induce, some unemployment, less consumption, and a mild recession.
right. Yeah, so yeah, it seems like we're sort of dodging a bullet, but it still looks like Europe is gonna have some dominoes dropping. I mean, is that what you're modeling?
I don't know if you're familiar with PMIs.
Yes, I
They're
am.
forecasts of basically of manufacturing activity.
Yeah.
Anything below 50 indicates a contraction. So Europe printed at 46 on their manufacturing PMI.
When did that happen?
And also Christine Lagarde today was a little bit neutral, but somewhat negative about the economy.
Yeah.
Acknowledged that in Europe they might be going into recession even this year, if not next.
Yeah. I mean, the sentiment, the reality is just it's just there's just so many headwinds, it's really hard to fight against that no matter what you do, so I think I'll stop recording. Thank you for talking, Jay, and catching us up.
Well, we don't really know much until the winter hits, but
Yeah,
we'll
right. Yeah, the jury's out. Yeah, dependent on Mother Nature.